10 trending stocks on Wall Street bets as of the 2nd of May, 2024, via Swaggy Stocks. AAPLBATSLANVDACVNADJTAITLRYSMCIPTON. Next article: Stellantis adapts to EV challenge. Follows Tesla's led by cutting costs through global job shifts. Stellantis NV. New York Stock Exchange. STLA is shifting its engineering recruitment toward lower-cost countries such as Morocco, India, and Brazil, responding to the challenges posed by cheaper Chinese electric vehicles and diminished demand. The company, known for producing Jeep SUVs, Opel Corsas, and Chrysler minivans, now targets hiring where the annual cost per engineer is roughly €50,000, roughly $53,400, or less, a fraction of the cost in places like Paris and Detroit. The company's CEO, Carlos Tavares, faces criticism for his high compensation amid widespread job reductions and worsening working conditions for the remaining staff, Bloomberg reports. Also read, Stellantis CEO warns of challenging year amid rising prices, report facing declining electric vehicle, EV, demand. Western automakers, including Tesla Inc., Nasdaq, TSLA, and Volkswagen AG, are cutting jobs and relocating production to more affordable locations. Stellantis aims to locate about two-thirds of its engineering workforce in these cost-effective regions over time. The strategy includes significant personnel adjustments. For instance, Stellantis plans to add 500 engineers to its nearly 4,000-strong team in Brazil and is hiring electronics engineers in Mexico. In the US, Stellantis has recently cut about 400 engineering positions at its headquarters in Michigan, which has led to problems with production launches, according to local union leaders. These changes are part of broader cost reduction efforts, including planned job cuts in Italy. In April, Stellantis reported a 12% decrease in net revenues to $44.6 billion for the first quarter, lagging the analyst consensus estimate of $45.6 billion. Consolidated shipments plunged 10% to 1,335,000 units. Stellantis shared plans to launch 25 new models in 2024, 4 of which it introduced in the first quarter. Analysts consider Stellantis to be the benchmark for established OEMs, noting its position in the market. Despite potential margin pressures from an increasing mix of electric vehicles, EVs, Stellantis stands out for its annual sales volume of over 6 million units and best-in-class margins, indicating a substantial buffer in profitability. Stellantis's global reach, particularly in regions slower to adopt EVs, offers a partial buffer against the risks associated with the shift toward electric vehicles. Stellantis stock gained 38% in the last 12 months. Investors can gain exposure to the stock via First Trust by Right Income ETF, Nasdaq, FTHI, and SPDR S&P Kensho New Economies Composite ETF, New York Stock Exchange. Price action. STLA shares are trading lower by 4.27% at $21.52 in pre-market at the last check Thursday. Next article: Nvidia supercharges AI chatbot with advanced models from Google and OpenAI. Nvidia Corp. Nasdaq. NVDA is enhancing its experimental ChatRTX chatbot by adding more AI models for RTX GPU owners. The chatbot operates locally on Windows PCs and uses Mistral or Llama 2 models to analyze personal documents. The update will expand its capabilities to include Alphabet Inc., Nasdaq, Goog, Nasdaq, GOOGL, Google's Gemma, ChatGLM3, and OpenAI's Clip model, improving photo search functionality. The Verge reports. Initially launched in February as Chat with RTX and available as a demo app, ChatRTX requires an RTX 30 or 40 series GPU with at least 8 GB of VRAM. It is a local chatbot server accessible via a browser, allowing users to input documents and YouTube videos to generate summaries and answer queries directly from their data. The chatbot's interface allows users to choose among different models to best suit their data analysis and search needs. Furthermore, ChatRTX now supports ChatGLM-3, a bilingual large language model, and OpenAI's Clip, which enhances interaction with photo content by training the model to recognize images. NVIDIA has also introduced voice query capabilities into ChatRTX by integrating Whisper, an AI speech recognition system that enables voice-based data searches. Recent reports indicated Tesla Inc. Nasdaq, TSLA, is looking to beat tech giants like Amazon.com Inc. Nasdaq, AMZN, and Google to become NVIDIA's prime client for H100 chips to train its artificial intelligence (AI) models. Analysts predict that NVIDIA will dominate the approximately $90 billion accelerator market in 2024, which is expected to grow to $200 billion by 2027, mainly due to the support from its Blackwell product. NVIDIA stock gained over 194% in the last 12 months thanks to the AI frenzy. Investors can gain exposure to the stock via VanEck Semiconductor ETF, Nasdaq, SMH, and Global X Robotics and Artificial Intelligence ETF, Nasdaq, BOTZ. Next article: S&P dials down Tesla's governance score amid concerns over Elon Musk's dominance, but retains BBB credit rating. Ratings agency S&P on Wednesday lowered the management and governance score on EV giant Tesla Inc. Nasdaq, TSLA, from neutral to moderately negative owing to company CEO Elon Musk's singly dominant role within the company. What happened? Musk's role within the company increases key person risk. This, coupled with the company's exposure to lawsuits and lack of board effectiveness, spurred the downward revision, S&P said. To reduce the key man risk around the company, Tesla will have to increase board independence and nominate new independent directors with no strong ties to Musk, it recommended. The agency is not the only one to flag concerns about Tesla's board independence. Earlier this year, the Delaware Court of Chancery Judge Kathleen McCormick nullified the CEO's 2018 pay package worth $56 billion at the time of grant after deeming it to be an unfathomable sum and the board of the company to be insufficiently independent of its CEO. The agency, however, affirmed the EV giant's BBB credit rating owing to its solid market share and liquidity among other things despite the underwhelming first quarter earnings. S&P expects Tesla's EBITDA margin to remain strong over the next 2 years despite the company cutting prices on its vehicles. Tesla has been slashing prices on its vehicles since the start of 2023 to maintain its market share amidst increasing interest rates and waning demand. While this negatively impacted the company's EBITDA margin in the first quarter, S&P expects the company will stem further declines for the remainder of 2024 with better manufacturing efficiency and cost cutting efforts, including the 10% layoff announced last month. The EV giant will also reap benefits from allowing rival automakers access to its supercharging network and licensing its full self-driving driver assistance software to others. The agency noted while adding that these will be critical to offset the pricing pressure and higher research and development expenses expected this year to sustain recent strong growth, hold its first-mover advantage, and improve market share. Tesla will need to make the total cost of EV ownership more affordable, including financing, insurance, and service costs. The timing for its goals to improve the affordability of its vehicles will be an important consideration for our market share assumptions and our assessment of its competitive advantage beyond 2024. S&P wrote, as the company's capital expenditure rises this year owing to the production ramp-up of different products including the Cybertruck and the refreshed Model 3 and other investments into autonomous driving and introducing newer products, the company's strong liquidity will give it sufficient flexibility, the ratings agency said. Tesla ended the first quarter with nearly $27 billion in cash equivalents, and investments. Price action. Tesla shares closed down 1.8% on Wednesday at $180. According to data from Benzinga Pro, the stock is down 27.5% year to date. Next article: despite surge in Tesla stock, investment director stresses concerns over fundamentals and demand. Bottom line: fundamentals are not good. The recent surge in Tesla Inc. Nasdaq (TSLA) shares has not deterred Mark Horton, investment director at GAM Investments, from voicing concerns about the company's fundamentals and potential demand problems. What happened? Despite the positive market response, Horton remains skeptical about Tesla's fundamentals, particularly in light of increasing competition in the EV market. He noted that other automakers are experiencing strong EV sales growth, even as the global auto market is in a downturn. The bottom line here is the fundamentals are not good. There's a huge plethora of offerings in the market now for EVs, and Tesla is lagging behind, Horton said. Horton also highlighted potential demand issues stemming from Tesla's aggressive price cuts, which have led to a drop in used car values and could result in higher leasing costs. This comes in the wake of Tesla's earnings release, which saw the company's stock rise by 24%, partially driven by CEO Elon Musk's optimism about robo-taxis and a reported deal with Baidu to introduce driver assistance features in China. Why it matters. Tesla's aggressive cost-cutting measures were highlighted in its Q1 earnings report, where it reported a 9% year-over-year decrease in revenue, missing Wall Street estimates. Recently, the company also announced massive layoffs as a part of Musk's hardcore cost-cutting measure. Furthermore, Tesla's optimism about robo-taxis has been met with skepticism. Xpeng Incorporated's vice chairman and co-president Brian Gu suggested that the commercial viability of robotaxis is at least 5 years away, a timeline notably longer than what Musk has suggested. Finally, Tesla's stock saw a boost following news of a potential full self-driving software rollout in China. However, the success of this rollout could significantly impact Tesla's stock price action. According to Benzinga Pro, Tesla shares closed at $179.99 on Wednesday. However, the company's Q1 2024 earnings fell short of estimates, with an EPS of 0.450 against an estimated EPS of 0.510.